Hello. We're now having another webinar on the. Oh, hi. Hi, everybody. Great. Good job. Okay, now this particular webinar we're doing now is about trading in a trending market. How do you trade profitably in a trending market? How do you know whether you've got a trending market? First you have to determine the trend. You've got three trends: up, down, sideways. And we know about a bull market, a bear market, a sideways market. I don't really need to go into that much detail at the moment, because we're going to look at actually how this can be translated into making profits out of these markets. Now, we have three types of trends. We have a primary trend, which is a longer term trend, a secondary trend, and a minor trend. The primary trend is the longest trend. It's normally around 6 months. Obviously, as we all know, we do have trends lasting much longer. Our secondary trend lasts from 3 weeks to anything to 3 months. So still quite short term overall, but quite long term if you're trading day to day. Even the minor trend, which is a short term trend, can last from 3 days to 3 weeks. So you've got to really know how to determine the trend first. And then what you're going to do is how to trade the trend. Now, we're going to look at the dollar yen chart, because that's the most... Ahmed. Well, I know it moved down today, the sterling, but really in the big overall picture of things, it didn't really move that much. So for the time being, we're still looking at the market going a bit sideways. Sterling is a bit messy, to be honest. So I really didn't think about doing a sterling chart today. I did the dollar yen though. So this is where we've got the dollar yen here. You can see how we've been coming down, and you've got this base here, and that was your first key, really, that the market had been trending lower and it had started to go sideways. We broke up out of the downtrend, and you can see, look, we went straight through to the 38.2% Fibonacci retracement. Now, you can see that this is a break of a really good trend down, and even there, that's the downtrend. So you can see that we still have a ways to go. Within that big basing pattern, which is over here somewhere now, you can see it when it broke and made a trend, it started to rise, and we did a trend channel. We went above it, we accelerated, and we accelerated away. And this is how you can trade the trend. You need to buy a trend. There's two different things. You've got a trend line and a support line. On a support line you have 2 points. On a trend line you have 3. So it's quite easy to actually, once the trend has been determined, to buy into weakness at these various points along the upward sloping trend line. You can see it's not just long term. I've done a Japanese yen chart here, very short term, as we'd say, our short term trade, our minor trend. You can see when it started to break up, we come back, we tested the trend line, we come up, we tested the trend line again, we went to 94. You see here we stayed above the trend line. Well, we didn't. What we did is we come back down, we tested the trend line again, and this is where you would have been buying, because it's a low risk option, is to buy at the trend line, because your stops are quite specific, because here you would be selling or stopping yourself out below the trend line, also below the 61.8 Fibonacci level. So this is how you can trade with the trend. You're buying at the trend line. Now, if these trend lines coincide with another major technical tool that we use, great. You know, I personally use stochastics and Fibonacci levels. And you can see where they all coincided to actually buy the yen in the short term. You can see again, it tested it, went up, come back, tested it, made new highs, and come back. And as we went to print today, it was still holding the trend line. So this is how we can trade within these parameters. Anybody have any questions just on that little bit? No, it doesn't have to be a 4-hourly. It doesn't have to be a 4-hourly chart. It can be any time frame. Done your 5-minute chart there. So, depending on how you are trading and what parameters you have to trade, whether you're a day trader, a scalper, it doesn't matter. Once the rules are in place, you can trade it on a 5-minute chart, 4-hourly, daily. It's irrelevant, okay? What I will say to you is, the farther out you go, i.e. the daily chart, that will take precedent obviously over a 4-hourly chart, which will take precedent over an hourly chart, and so on and so forth, right down the curve. So, but you can still get some really good patterns. You can see here, I mean, you could draw a trend line here, broke, up, down, there you go. I mean, it is on the yen pairs, I totally agree. But that's why on the yen pair, I look at it from a different, I don't do it short term. You can't. You know, yesterday was the ideal day to go short. Sadly, I haven't got a chart of that on here because we're looking at trending markets today. There's all, we can do different ones, you know, in time to come. But yes, it is. It is difficult to know. But if you're looking at it a little bit longer term, you see, whatever you're trading and whatever market you're in, you've got to know where the trend is. Because if you're just trading blindly and you're buying down a level because it looks quite a good level to buy on the 5-minute chart, unless you are aware of what is going on around you and outside your parameters, you're going to come unstuck and you're going to be like, oh my god, you know, why has it done this? Well, if you go back and just take a little bit of time at the beginning of the week to find out where your primary, secondary, minor trends are, you can work a lot better within these parameters. Now, I've got a sterling, euro sterling, because obviously the euro has been quite flavour of the month recently. So I've got a euro sterling chart here. Again, we had been basing, I mean, this is a daily chart. If you looked at the weekly chart, you can quite, you know, significantly see the head and shoulder base formation. So us as technical traders were looking for this breakout. The trouble with us is, do we get in too soon? You know, it's also how deep are your pockets, what sort of parameters you have financially as well. Now, with the euro sterling, we as technical traders knew that the market was going to break, but when? Okay, so we did break. We broke that head and shoulder top. And then I drew on this trend line. Now, when we come back, I'm like, okay, look, it's got to hold here. If it doesn't, you know, my view's wrong, I'm out of the trade. It did. It held. Power of the trend line. And as you can see, on the second break, up we went. And I'm showing you, which are quite easy in hindsight, but I'm trying to show you here of it's not only hindsight, it's how you can anticipate that a break is going to occur, and how you trade within that break. This is our base pattern. This had been our trend. This is our break point. That's our new trend. Back down, off we go. Now we're looking at the market beginning to top out. So if you can see, like, the big picture, if we went back, is actually euro sterling has been in a downtrend. So our sideways trend has took us into a secondary uptrend. Everybody with me so far? Okay. the rules of trading within trends. We all know them. We buy dips in an uptrend, and we sell rallies in a downward trending market. As long as you get those 3 points where you can draw your trend line, you actually shouldn't have any problems getting in at a correct level to be able to make profits. And that's what we're doing. We're trying to maximise profits. Okay, now I've run through this webinar very, very quickly, because last time I was really stuck for time, and I was asked a lot of questions, and no one's asking me any questions. So would anybody like to ask me something, anything really? You want me to look at the Aussie? Okay, hang on. Yeah, we can do this. Okay, the Aussie. Any particular time frame on the Aussie? Can I show the first slide, please? Can I? Later. Let me just get through this first. Okay. Daily. Okay. Right, well, let's do one at a time with a list of free trends. Okay. Boyke, are you really trying to trip me up here? Okay, well, I don't use candle charts. I'm only putting them on any presentation I do because they look pretty, and you can tell at a glance. But when I first started, there wasn't any candles charts, and after doing 4 years at Nomura Bank, there was no benefit to me in a swinging doji whatsoever. So personally, I like to look at a bar chart. So we're looking at a bar chart first, okay? Well, we're only going to look at bar chart now. So you can see with the Aussie that on the daily we have been in a little uptrend there. 3 points there. 1, 2, 3. Got it. Okay. We know that 106. You've got to incorporate trends with what you know from previous action of the market. You can see where it topped out there, so we're expecting this to top out around there, which it did. It's come down. You can see now we're in a secondary downward phase. Okay, so on any return from here, you would expect this to hold up. I can show you better traction of. Hang on. You'll have to bear with me on this one because I have everything on my little fingertips. There you go. Right. Ignore all my scrolls and moving averages and God knows what. You drew that line across there, that support line. That was the support line we were looking at from this top. You can see quite clearly that the Aussie had made a top here at this 106 area. So where was the break point going to be? Okay, well, it was going to be on a break of this level here. Can you see that? And that comes in, you can see down here at 103.61. Okay, so when we came down yesterday, we can see the reversal day. It's not a key reversal day. They come at the end of quite big trends, and they have higher highs, lower lows, and close above the previous high or low of the day. But these are reversal days and not to be ignored. Now, if you see here, on that reversal day, we went back and we tested that trend line at 103.61. The high today has been 103.63. Now, you can use them in conjunction with other things, but just that simple drawing of a line, that's where you want to add to your short position, or if you're short up here, buy them back. That's the sort of thing you need to understand. And that, as I said, that can be done across all time frames. Do I see it coming back from the bottom of this wedge? Are we still on the with Fibonacci levels, it's a difficult one. I personally, I don't take the absolute top or the absolute bottom of a move. I would like, it's just that this one was quite a little move down. Normally, if I take them fibs off there, you could do this. Okay, and that gives you a little bit more of a shorter time frame. And you can see the fibs that I put on and the fibs that I would put on anyway, they'll come in at the same level. It's just it's a different fib level, but you can see there that that's where it stops. So easy. My fibs. You can see there that it wouldn't have mattered where you drew the Fibonacci level to or from. The market halted at the trend line. What criteria do I look for in fibs? Okay, well, this is quite a trending market scenario, but I'll go for it. If a market is trending, and it's trending strongly, okay, either way, doesn't matter, it should not come back more than 38.2% of that move. That's the criteria for a trending market. Sideways market, they can come back where they want to, but in a strong trending market, 38% is the stop loss. Ahmed, is that a stop loss, or can you be a bit more? Okay. Stop loss. No other safety technique to control risk. Yeah, I mean, you do. Of course there is. There's always risk management isn't about technical analysis. Let me tell you. Okay, risk management is about putting a financial stop in. Obviously, it depends on how much you're prepared to lose. But what is really, really annoying for me when I teach people is the fact that, and for traders, is the fact that they can be spoofed out the market, and if they'd have waited another 5 or 10 ticks, they'd have made 150 pips. That's the problem. So if you're going to put financial restraints on where you place your stop loss, you shouldn't really be looking at trends and Fibonacci levels. You should just be looking at price action, and you want to make a 1-to-3 ratio just on price. By using technical analysis, trends, Fibonacci's, moving averages, whatever, you're minimising your risk and you're trying to extend your profits, because no one wants to get stopped out at the high. We've all done it. Even when I started. Did that help, Ahmed, or not? How do I measure targets? Well, it's a difficult one, really. Not difficult for me, but difficult to try and explain. I look at, because I do this every day, day in, day out, and I, for many hours, day in, day out, Euro Swiss, really? Okay, in a minute, when I've done targets. You can gauge roughly by looking at the market where it's going to retrace back to if you've got your correct Fibonacci's and trend lines in place. You can look at that, look at the stochastics and go, do you know what, that's looking a little bit oversold, that should go back, and where's it going to go back to? It's going to go back to there. And it did. And it's not hindsight, you know, I write about it every day and post it to different people, and it's on my website, so it can all be checked. It's all there. Harold, would you please touch on Euro Swiss? Do I count EWs? Elliott Wave? No. In fact, the only subject that would ever make me prickly is Elliott. Slide of the 3 trends. Hang on. I'll have to do that. Remind me when our time's due up, because that's on a different screen now, and I'm getting into You're a Swiss, allegedly. Well, I always have a target in my head before I look at what I'm going to do. I'm not, when I run the trading group, I'm not in it all day, every day, although I'm looking at the markets all day, every day. There probably is 2 or 3 trades in the whole of them, the ones I look at, that are going to have that feel about them they're going to be activated today. I don't trade in all of them all of the time, day in, day out, because I look at 22 markets. So I cannot possibly, I have my favourites, obviously, the Aussie being one of them, lucky for you. The Euro, that sterling not so much, because, it does seem to have a mind of its own a lot of the time. What do I think of the cable slide? This is more important to plan your exits. How do you plan yours? Well, I look at the chart, I look at trend lines, I look at Fibonacci's, and I look at where I'm going to enter and at how much I expect the market to move within that 1 to 2 to 3 day period. Don't shut it out every day. Sometimes I can have stuff on for a week. Doesn't matter to me. I'm in that position where I can run it for a week, whereas a lot of you are not, which is why I'm saying you trade to your own pockets. If you're trading very, very short term, you look at a 5-minute chart. If you don't, and you don't need to be in and out of the market all day long, you take a little bit more longer term view. But whatever view you're having, you have to know where the trends are. You have to know which way the market overall is going. Otherwise you're swinging blindly. What other markets do I look at? Okay, I look at all the foreign exchange, not the emerging markets really. I don't want to look at a Singapore dollar, to be fair. Look at 22 currency pairs. I do gold, S&P. We do the German bunds, FTSE, Eurostoxx, DAX. I don't do them, I don't like them. I do the S&P, gold, oil, and all the currencies. How did you when you started? Well, it was different for me, because we've gone from a place where I started out on the life floor, the life market, in a pit with everybody in there shouting, screaming and hollering. So you could see the flows, and I worked for Midland Bank, so I knew what orders were coming in where and who had what, so you could trade accordingly. That's how these guys on the other end of our sales desk got the business, and our proprietary traders back at the office, that's what they were looking at. They were the ones that were trading. I wasn't. I was on the outside looking at all this happening, running into the pit, executing orders and being on the phones. It was only when I went back to the bank dealing room that I saw how it was all put together. So my training was a lot different from you guys, because we didn't have internet. We just had a dealing room, and we had everybody on the phones. We had central banks coming in and out all the time in the early 80s. And right, hang on about oil. It's all very interesting. It's oil. Yes, we are thinking Brent has topped at the moment, but we have been saying that for 2 days, so we'll have to have a look. Was I treated as a lady in the pit? Oh, how was I treated as a lady? Absolutely fantastic. I have no qualms about being one of the first women traders in the life market at all. As you can possibly tell, I'm not a shy, retiring little flower. Now, because I'm not a shy, retiring little flower, 30 years ago I was less of a shy, retiring little flower. So whatever I got, I gave as good as I got, and it was all meant in fun. And you took it as that way. We didn't. Yeah, God, if I'd have screamed sexual harassment every time anybody touched me, I would have got nowhere. I wasn't like that. The women on the floor at that time, they weren't like it. We were, I suppose, the first ladettes of the 80s. I mean, I hate to say it, but we were. We went out drinking. We partied hard. We had a great time, and it was a great learning curve for what I'm doing now. You guys are sat at home, presumably, on your own, looking at a screen, going, for the love of God, where do I start? If I was starting off now, I'm not sure how I would react to just seeing prices on the screen, having no... Because the one thing you do not want to hear is spot boxes. You know, if there's one thing, apart from Elliott Wave, but one thing that annoys me going into our office in Gibraltar, oh, thanks. I know. Oh, yeah, they are boring to listen to, really, yeah. The one thing that really annoys me when I go into our office in Soto in Gibraltar is the fact that they have squawk boxes on. Now, I've got to tell you, even though I speak on CNBC, they've changed their mind from bullish to bearish on every market 25 times a day. You don't need that. You just need to understand how you're trading, why you're doing what you're doing. I don't mean, why am I doing this and I'm not a doctor. I meant, plan your strategy for the day, you know. Understand where you are. Well, you know, I suppose, Boyke, I'm a little bit biased. And the reason being, I have to say, is I don't have an ego. Do you know what? Look, I don't care if that went up there, and I'm short now of Aussie. If it went there, I don't care. I'm out of the trade. I do not sit there and go, do you know what? It might come back. Do you know what? Because, look, the reason I'm selling it is this. I don't want to be selling it here, even though it's higher, because your parameters have changed. And what I saw day in and day out on the live floor was we'd all go to the coffee morning, and everyone used to sit and chat, mainly Americans, because we didn't have a clue what we was doing in London, so we had all these Americans in. And they'd go, the bonds are going down. That's it, they're going down. Well, do you know what? They didn't. Every day they went up. Now, these guys who were like beating their chests, leaping up and down, selling every bond market, at the end of the day, as the little bell went, was buying them all back. Now, they lost money, and I was like, I don't get it. I don't, and the next day they said the same thing. Now, as a woman, I had a PA, well, as a trader, I had a PA account in Midland. I just totted into the bit, buy 5, go out, still be on the phones, broken, blah, blah, blah. At the end of the day, it had gone up, I go, sell 5. And that was it. That's how I got the job back at the office, because whatever it is they were looking at, it had changed. The parameters had altered. And that's, you know, whatever financial information, news, figures were coming out, it meant jack, because the bonds went up, no matter what they said. And that's how I discovered charts. You know, I was waiting for money supply to come out one day, went round the back of the booth on the live floor, and there was the chartist. And I went, why are the bonds going up? I know they are, but like, I'm in such the minority because everyone's selling them. He said, look at this chart. It's gone down for 7 years, across for 3, now it's broken up. You are in the world now of the bull market. Good enough for me. Just went in, bought my lots, told all my customers, buy bonds, that was it. Ended up being a little star back at the office, new job, new title, technical trading. That's it. That's that. It wasn't very exciting, really. No, I like trading non-farm payroll. I like trading non-farm. I tell you why I like trading non-farm payroll, because it's very contrarian, and the reason it's contrarian is because there's so many figures that make up this, and you have revisions, but by the time as the figure comes out, it's an automatic reaction to buy or sell. Now, if my technicals tell me it's going lower, I'll put in a cheeky offer or a cheeky bid. You're 9 times out of 10, you're going to get hit. Pardon. I'm a bull. I'm Taurian. Funny that, isn't it? Anyway. Now, see, I've lost my train of thought now. Right, I know. Cheeky bid, cheeky offer. You're gonna, by the time the economists have actually got their head around it, and the cash guys come back, an hour later, because the cash market opens an hour later than when the non-farm payroll figures come out, you'll find that the market will react how it should have done, not just on a spike because the news was what they thought it was, but it wasn't really. FX is emotional, I won't say it's not. So that's why, for me, trading charts works. The reason that is why is because it takes the emotion out of the position. Can't sit in front of it all day looking at it. Can't be bothered. Used to. Didn't do me any good. So what I do now is, I now talk to people about it through the day. So although I'm still there, sitting in front of it, you know, I know where the markets are, the ones that I'm trading, obviously. But for me, trend lines, Fibonacci's, technical analysis, charting, whatever you call it, takes out that emotion. And also greed. You don't want to be too greedy on a trade, because otherwise you'll lose. No. Dr. Rob, I don't do any fundamentals whatsoever. Where do you start? What is flavour of the month? There are hundreds of figures. In one figure, take the non-farm payroll, you've got so many components that make up that one figure. Then you have revisions on revisions on revisions. What's the point? There was nothing that was ever in the FT or the Wall Street Journal that gave me an insight in how to trade. Never. Practice. Practice and me. No, seriously. No, it is practice. And do you know what? You can't even practice on a training account, because a training account is nothing compared to when you actually go live, and it's your money. Back in the day, it weren't my money. I could trade Midland Bank money all day long. It didn't matter, you know. But more and more now, the retail market is getting bigger and bigger and bigger and bigger. And I think it's really sad that there isn't the help, if you like. I mean, you've got FX Street, which is great for the retail market, but you know, even on the chat line that I've had a look at, they've all got different views, and you get suckered in. You know, you really, well, I wouldn't, but I can appreciate how a new trader would get suckered in. Is it bullish? Is it bearish? Is it this? Is it that? You know, just sit back, look at the time frame you want, decide where your trend is, how you're going to plan your strategy for the day. The book I got was actually, oh God, what was it? I can't remember. Yeah, that's so long ago. Yeah. Oh yeah, it's always great to spend someone else's money, but don't forget, I mean, even back then you had risk managers on. I mean, you were accountable to someone. They just didn't let you out with their money to trade as you saw fit. You had to have, you know, you had to give them a reason for doing it. They didn't just let you loose on the market. In those days, they only let you loose on your expense account. What can I say? But to trade, no, they didn't. You had to sort of say why you were holding a position overnight, if you were holding a position overnight. Ranging markets, I think let's answer one first from Boyke. I think ranging markets are easier for new traders or inexperienced traders or traders with less than 2 years experience to trade, because if you look at 90% of markets trade sideways. That's just a given fact, all right? So on the 20% that's ranging, that's trending, you can define the range in a ranging market. Sell at the top, buy at the bottom. Sell at the top, buy at the bottom. Sell at the top, buy. That's it. That's what you do. It's when the patterns emerge within that range that gives you a clue whether it's going to break to the top, break to the downside. That's a whole nother webinar. Do you think the market is random? I do think the market is random, but I do believe very much that history repeats itself. Maybe not in the price, but the way that the market and the price moves. Yes. I don't believe the waves. You're talking Elliott wave again. You know, 1, 2, 3, 4, 5. The reason with that is they're never wrong. Give me an Elliott waveist theorist who is never wrong, or is wrong, and you know I'll have dinner with him. But they're never wrong, because if they're wrong, it's the correction of wave 2, leg B, minus C, and I like to get around that. You know, there's just no point in looking at something that doesn't give you specific targets. Why would you bother? And it's been around forever. I mean, I went on a seminar with Robert Prechter. That's how old I am. And he said back in, 86, sell everything. Stock markets are going to go to zero, and we're going to have a nuclear war. And this is absolutely without a shadow of doubt. I went because my treasurer at Midland Bank, this was not a little bucket shop, said, I don't want to go, you go. I went. Yeah, but he is great at predicting the past. It's historical. Of course, when you're on your final wave, whatever it is, you can pick out 1, 2, 3, 4, 5, A, B, C, A, B, C. Of course, it is hindsight. Harry Hindsight is a blinder, but we don't want to be Harry Hindsights, do we? We want to be there first. Trading else's money, pro trader. No. Because if you're trading a demo account, you have no fear. You let loose, doesn't matter. It's not going to cost you anything. So that emotion is already taken out of the market. You can sit back, you can press buttons. Yeah, it's going up, it's going down, so on and so forth. When you are trading your money or someone else's money, you're accountable. You are more accountable actually to yourself than you are to an institution. I felt more pressure, if you like, when I started trading on my own back in 1996. I felt more pressure then than I did trading for the bank. You know, I was young, it was all new. You know, I knew the bonds was going up. The charters beyond the booths told me that, so that was great. Right, do you want me to go back to the, because I haven't got a lot of time, I'll run out of time again. So you wanted me to look at, thing 1, didn't you? Here we go. One slide, no, that is it. What one did you want to look at? Up, down and sideways, wasn't it? I think it's probably number 2, I think. Is that one? Can you see that? There you go. Up, down, sideways. We all get the bull, the bear and the man sitting with the drink, don't we? We all understand the reason. Next. Want the next one? What are you doing? You taking photos of my course? Hang on. There you go. Anybody else want anything else? Right. Now, have you all enjoyed this? No problem whatsoever. Good. Good. Well, inspiration. Well, it's great. It's been really nice chatting to you all. I know we got off the subject of trending markets somewhat, but hey, you know. Oh, you wanted Eurosis, didn't you, Dr. Rob? Yeah, of course you did. Okay. Where are you? Oh, it's a nightmare. Look, you don't trade Euro Swiss forever. And then look at it. Look. Now this, what time frames? Oh, they won't do 5 minutes charts. Probably the least a bank will trade. A bank trades a 4 hourly chart. Even 60 minutes was too slow. Was too short term for us. Okay. Oh, we do. We still have 2 minutes. Oh, okay. Yes, I think it's recorded. Yes, FX Street say. Right now, Dr. Rob, you wanted to look at Euro Swiss. This is when, let me go back a bit. There you go. Okay. So you can see the scale of this. Let's do it on a weekly. You can see it a bit better. Okay. Now, as we know, the Swiss are not renowned for their movement, but in 2012 they basically did die, you know. Now look, so when you think that the Swiss National Bank came up and said what they said here was that the Swiss was going to weaken against the euro, it did, because it's a Swiss National Bank. They don't say much, but when they do, it's like the Bank of Japan. Listen to them. You know, it's very rare that I like a central bank. It's Bank of Japan, Swiss National Bank, and the Fed. Bank of England, no, not really. They used to ring me, fancy that. I worked at Midland Bank, yeah. So the old lady come on, the Bank of England come on, and say, where would be a good point to buy sterling against the dollar? They haven't got their own charters. It's like, oh, great, well, he'll be fine. Then say to all the dealers, Bank of England's going to be buying sterling. Oh, wipe that off, it could be insider trading. Anyway, it wasn't. But, because they used to tell us what they were doing anyway. You see where you had a lot of movement in it and then just did nothing. So, where would you, I don't trade Euro Swiss, I've got to tell you, it's bored me to tears over the years. There you go. Oh, look at that little 50% level there. Right. Who? Hong Kong, also backed by central banks. Not sure. Why did Brown sell her gold? Because he was stupid, that was why. He sells gold at the low. I bet he's really sorry now. I don't know why he did it, you know, but he obviously didn't have a chartist, did he? Otherwise he'd have seen. And you know what, there is even no excuse for him, because it was ranging. He sold at the bottom of the range. In fact, I think he was the bottom of the range. Are you buying it? Yeah. What, Euro Swiss? No. I don't... No. Gold. Well, I'm out of gold for the time being, I have to say. Very well on gold last year, the year before. Left it alone. No, it was 2 years ago. Oh. Left it alone a little bit once it sort of broke down below 1800. I'm looking for the monthly trend line at 1629 to hold that gold. I'm going to go in there, because I think the monthly spot on for trending markets, eh? The monthly trend line in gold is 1629. Write it down and just buy a little bit. Honestly, it'll be fine. You know where your stop is. Below 1620, 25, you're out. No, below 1625, because that was the previous low. Below there, you're out of gold. Your upside's limitless. Your downside risk, like trading an option, really. And I do trade options as well, but this is for a whole new webinar on options. I think I'm being wound up now. So, let's quickly zoom to cable. Quickly. It's lucky I know where all my charts are, isn't it? Yeah, I think we could have done, actually. Let's have a look. Oh, wow. Wow, wow, and wow. Now look at that. In my last minutes, cable has hit its 76.4 Fibonacci level there, 155.30, low being 155.34. Do you know what? I don't need to say any more, do I? There you go. Yes. 95% of your retail traders do lose money in FX. 95% of retail traders fail. And that's because you're getting the wrong information from the spread betting companies. This is not going to endear me to them, but you know what? I'm past it now. So, until we meet again, alright? Enjoy. I hope you've enjoyed it. I've had great fun. Great. See you next time. Bye.